What's up, everybody? Let me know in the comments if there's a ticker we should look at. So there's so many tickers out there, you can't know about everything. And then when somebody tells you about a company and you start looking into it, you start to discover some amazing things. You're like, wow, why didn't I ever see this company before? But the only way for you to know if a company's good or not is for you to do a little digging, a little research. But you only have so much time in a day. And I know people are going to say, just use a screener. You can just screen different parameters, which I agree with. Screeners are nice. But with a screener, you might eliminate a company that's really worth looking at, because it's kind of like when people hire for jobs, they have to have some screeners. Like, they can't just interview every single candidate, because some jobs you have like 1,000 candidates, so you can't spend the rest of your life interviewing. So you just set up parameters, and maybe one parameter is they have to be a college grad. So it just totally eliminates anybody that didn't graduate college. Maybe another parameter would be they have to have at least 5 years of experience, which makes sense. But the problem is you might eliminate somebody that was a great candidate for the job, which is unfortunate, because maybe somebody was a college grad with 3 years of experience, but they would have been like an all-star if you hired them. But you'll never know that, because you have to have some type of, and the network, not the movie theater meme stock. It's kind of like with stock screeners. Like you eliminate certain stocks because you can't spend the rest of your life researching stocks. You have to kind of like look at whatever fits like certain criteria. But yeah, that's an issue, because you might eliminate something that was great. Victor, what's up? How's it going? I've been thinking about you every time NVIDIA drops. I kind of had a theory in yesterday's live stream. Streaming services are always interesting, and they've been beaten down. My theory is that we know NVIDIA will drop. Just like any stock can't. If a stock goes up really fast or down really fast, there's generally some inflection point. And I'm not saying it's going to go down to like a 200 billion market cap company. It might go down to 2 trillion and come way back up. I don't know. But generally, if it goes up really fast, it has to come down at some point. Usually people need to take in their profits. And I think it's more the market psychological in the short term, with price movement. So I think once they became the largest company in the world, people started realizing, hey, something's not right. Microsoft is a much better company, much more history. So people took in their profits. Everything money's tool has them massively undervalued. I was curious what your calculations might say. And I think they're doing a great job. And I could see them growing to a 10 trillion market cap company. I could see a lot of companies. I mean, Meta was my pick. I said they'll be the first 10 trillion market cap company. A lot of companies can do it, but it's really hard, because not only do you need to like have amazing, cash flows and revenues, but it has to keep going up. Like you can't have, once there's a pullback, once you see, and that happened with Meta once they started like subscribers weren't going up for a couple of quarters, and I don't know what the metrics were, but always the losses on the metaverse. And then you saw a big crash in the stock price. Everything's money. Let's do NVIDIA on But it's definitely people have to take in a profit at some point, because the reason the stock generally goes up like it did for GameStop is nobody sold. Like everybody just held. And if you have enough people just to hold the stock and not sell, you're going to see it has to go up. But of course, you can't hold forever because people want money. They don't want to lose money, and you're going to lose all your money if you keep holding. So let's see the valuation. I'm going to give them the most conservative valuation to give them the highest the highest number possible, because let's do an 8% whack, even though it says 9.5%. And it's funny, sometimes a stock split hurts the companies, doesn't do well after a stock split, because the idea is with a stock split, the stock price is lower, so it seems more affordable. So it generally goes up with a stock split, and a stock goes down after a reverse stock split. But I've seen a lot of times a stock split, it hurts the stock because there was so much buildup before the stock split. And that's what usually happens. Like if a market cap of companies like 100 billion, right? Say this is on 6/1, June 1st, 100 billion. And there's so much hype that the company is going to crush earnings. They're doing so well. And everybody's waiting for them to release earnings on 7/1. Because that's when, earnings 7/1. So there's just so much hype about the company, how great a company's doing, and right before earnings, the stock goes up 50% in a month. It goes 150 billion. So just a ton of hype, right? And then the company releases earnings, and even if they beat earnings, even if they beat them by a little, the stock goes down because people take in their profits. Hey, David. So I mean, let's go back to the video. So if there's so much like hype, or stock gets dragged down so much before earnings or before any news release, you'll see. And that's the hardest thing for people to understand. It's not like if a company has great earnings or bad earnings, if all that information was priced into the stock, then 59, 78, 92. Let's grow it a little more. So these are their future free cash flow for the next 3 years: 59 billion, 78 billion, 92 billion. I'm at $63, which is like a 1.5 trillion market cap company. Let's just pretend they beat everything that was all their numbers. They just crush by 20%. Come on. 78. Okay. So I'm going to do a 20%. They beat the forecast by 20%. This keyboard, it never works. Okay, so this is the forecast for the next 3 years. Okay, it's 59 billion. These are all billions. 78 billion. This is 2024, I guess, forecast. This is analyst forecast. You can see it here. So in 2027, 91.8 billion. So these are analyst forecasts, which are based off of the company's forecast. So 59, 78, 92. This is a forecast for the next 3 years. This is how you value a company. This is how any analyst does it. Yeah, I got my Puma shirts. I love these. They're so comfortable. So I'll just show you. So okay. The reason, okay, so this is the, okay, so this is the actual forecast, the free cash flow forecast. This is how you value an asset, any asset. You can value a real estate property. You can value a stock. You project their future free cash flows, which we're doing right here, and then you discount it back to today using a discount rate. We used a WACC for companies, so I'm using a 9% discount rate. And you could find the discount rate. I just pull it from Finbox. Finbox has a low WACC, a medium WACC, and a high WACC for every company. Let me just do, I'll just give it an 8 because the problem is with NVIDIA, you can say, well, you can, but most analysts at this point are not going to say the stock's going down because they want to be right, and they want to be perceived by their peers as knowledgeable and by investors as knowledgeable. And for a while, analysts were saying it's going to go down, it's going to go down. But at this point, it's just the easy way out. Just say it's going to go up because it's just been going up, even though the models are contradictory. So if they just hit these forecasts over the next 3 years, the stock is actually worth $63, which is exactly half, ironically, of what they're trading at. So the market, it should go down 50% based on their fundamentals. And And then every time a company releases their quarterly earnings, then the analysts redo their models based off what the company projects for the future. Because most companies give a projection for the following quarter and for the whole year. And then the analysts plug that into their models. So let's just say they beat their forecast by 20%. So instead of 59 billion for 2024, it's 71 billion. And instead of 92 billion, it's 110 billion. So then their valuation is 76. So they're still not even if they beat their projections, they're still not even worth as much as they're trading at, which we all know is true. So what if they beat it by 40%, 60%? That's crazy. %. Oh, so they have to double. They have to not only hit their target, but then hit it again. So they have to double. That's kind of funny that it happened to be 100%. So they have to double their forecast just to be priced appropriately. Not even to go up to triple in price. But just to be valued where they're at, they have to double their forecast. Jason, what's up? Yeah, what's the request? But the thing is, they are crushing their numbers. They're up in data centers, they're up like 1,000% in revenue, and so they're just crushing their I wish they made this easier to read. So this is 10 billion. I wonder why they don't. Tomorrow, I'm buying one whopping share of NVR. They make everything so difficult. Why don't they put the Isn't that funny? So in 2021, Nvidia had 5 billion of free cash flow. 2022, they had 8 billion, so it's up 73%. And they actually went down 50% in 2023. Most people don't realize that their free cash flow was cut in half from 2022 to 2023. And this is post-COVID. This is not like a COVID thing. But this is why the stock's going up so much. In 2023, it went from 4 billion to 27 billion. So it went up 5x or 600%. And then it went up another 46% in the trailing 12 months. So they have to go. They actually completed their 2024 fiscal year. So they have to go from 24 they can buy Porsche if they want. So yeah, this is the big hype. They went up 600%. Which is like a 5x growth. It's not a 6x growth, even though it seems like a 6x growth. It's 5x growth. So in order for them to just be priced appropriately, to be a 3.1 trillion market cap company, they have to grow 119% in 2025, so 27 billion to 59 billion, and then grow 32% after that from 59 to 78, and then grow another 18% from 78 to 92. I guess Scott doesn't like Albemarle ignored my requests. Yeah, no, we'll definitely look at that. Albemarle, the Dutch. So will they hit these targets? Oh no, I'm wrong. This is just, if they hit these targets, then they should be valued at 1.5 trillion. In order for them to be valued at 3 trillion, they need to grow to these cash flows. 118, 156. So they need to like triple their free cash flow. So 184 billion free cash flow. Let's see what companies that are valued appropriately, that are really valued at 3 trillion. They're at 60 billion free cash flow. Microsoft. And what's Apple at? Apple is at 100 billion. So they need to really so I guess I'm it's who knows, right? But they NVIDIA, what did I say? NVIDIA makes up 81% of Bubs. Yeah, I'm holding pets. Don't remind me. Okay. Albemarle. It's hard to say. 11.95. I was gonna add, Victor, did you add to your short? Because I was thinking like when they beat Microsoft, I thought that would have been a good time to short. Not that I did, but did you add to your short? I'm down on Valet, Porsche. $8.8. But this always happens, not just with stocks, with anything. When there's a lot of positive news, people think everything's going to be amazing, and when there's negative news, people think world's going to end. Like when COVID, people were like, this is going to be the worst thing. COVID's the worst. Everybody's going to die. We all going to need. And then after kind of we got used to things and we realized not everybody's going to die, then things get normalized again. And then we're like, oh, COVID's no big deal. It's just a flu. So with the stocks, same thing. When a stock's going up a lot, like everybody jumps in. And I wish I jumped in on NVIDIA, but I keep saying, oh, it's too, I'm too late. But I would have made a ton of money. But one. So Albemarle, so there's really not much. The forecast is for them to be negative for a couple of years. So if they can hit that one, and they were at 1 billion free cash flow in 2023. So if they get to that point again, they definitely could. Albemarle. So bromine, lithium. Is this a recent chart of lithium? So they're probably correlated to lithium. Wasn't that Nirvana album, Lithium? You don't listen to what other people say, including me. So many times people say things, like with the price of like midstream oil and gas stocks. People like comment, you said their stock price is correlated with the price of oil, but this is a midstream stock. Midstream stocks aren't dependent on oil. They have future contracts set up with the suppliers. So oil is not a factor. They're just their stock price is based off of volume, how much volume of oil they ship, not the oil prices. The more volume of oil they ship, the more money they make, and the less volume of oil they ship, the less money they make. But if you ever look at a midstream stock, what's the biggest midstream? It's correlated with the price of oil. See, this red line is the price of oil. The blue line is energy transfer. Look how they come right back together. There was a gap here, but the gap was lessened. What's the midstream stock of the largest midstream company in the world? It's in Canada. Suncor? This black line is Suncor, and you can see Suncor is a little more correlated to oil because there's less of a gap, right? But they all start at the same place, and they all end in the same place. Does anybody know what I'm talking about when I say that? The reason, like when you look at an upstream or downstream, people like the experts say those are correlated to the price of oil because they actually sell oil. A midstream stock just moves oil from one party to another. Like Energy Transfer moves most of the oil through pipeline, some through vessel, right? But you should not just listen to what others say and say, oh, the midstream stocks are not correlated to oil because they just move volumes of oil. And that's what people write in my comments. And I say, no, that's not true. If you actually look at it. So don't listen to what anybody says. You could listen to them, but you want to prove it. Okay, so this is how this price, Albemarle. In North Carolina. Why did I think they were Dutch? I'm thinking of another company. So no matter if you do a ton of due diligence on Albemarle or you do no due diligence, you're probably going to end with the same point. It's just moving with the price of lithium, right? So you don't have to look at Albemarle in a sense. You just have to predict lithium. And as you know, commodity prices go up and down. Commodity prices do not go up indefinitely and don't go down indefinitely like a stock can. They generally go up and down. They do go up over time, but they can't go straight up over time like an NVIDIA or Microsoft. They have to regress because it's a supply and demand issue with any commodity. So that's why commodity stocks like oil stocks or lithium stocks, they usually pay a dividend to compensate people for that, for not really going up over time. Like, who cares if Meta pays a dividend or not? I'm up 500%. who cares if Apple pays a dividend or not, right? You can be up 10,000%, but you can't be up 10,000% by buying a company like this. You might be up a few 100%, but you could have just bought lithium and you would have done the same. What the fuck is that? So even if you timed it perfectly and got in around $10, you could have went up 400% from 10 to 50 and you get some dividend in. But you like it's impossible to be up 5,000%, 10,000% with a stock like this. With an Nvidia or Microsoft or Meta, you could be up 2,000-3,000%, even in a few years. But yeah, it's they're cyclical, and nothing wrong with cyclicality. I'm up like 150% with ET. I timed it right. Now, something to think about is when you see these, you see how it's smooth lithium prices, and ET it's more kind of like jumpy because Albemarle is a function of the stock market. So if the market crashes, like up here, say the market came down 20%. I don't know if that's true. The market came down, but all stocks pretty much go down, even during a crash. And when there's a really big bull market, all stocks pretty much go up within reason, right? So when people say, just buy if you want to hedge yourself in times of trouble, buy gold. But it's not even true. It's not a hedge. People who go, I bought gold to hedge myself, and I'm still down when the market's down. I mean, it still took a pretty big dip, like probably a 30. Look at this. This is the S&P 500. So that's like a 30% dip from COVID. It's the same thing with gold. It's right here. Gold took the same dip. Maybe it probably just as severe, because look at the S&P 500. It's up 360%, and gold is up 380%. But that's a long time frame. Okay, I didn't realize it was okay. So 5-year time frame. So the S&P 500 is up 86% in 5 years. Gold is up 63%, which kind of makes sense, right? But it's not a hedge. You're not really hedging anything, because look, it kind of moves with the market. Most things generally move. Most things move with the market. How do you find a stock that doesn't move with the market? The only way to do that is you have to short the S&P 500 or short a stock if you want to move opposite. But you run the risk of timing it wrong, things like that. So there's really no way to hedge yourself in a sense, unless you want to short or buy puts, which is kind of a waste. Probably buying Monster tomorrow if it's still below 50. I'm betting 50% of my fall on Intel. I think it's going to be an easy 3x. Will you buy Nvidia with current forward PE? No, I mean, I'm kind of in the school of like investing in stocks that are good values. And the unfortunate thing is, this happened with Tesla too. I could never buy it because there was never a good valuation, even though in my mind I was like, I think it's still going to go up. I think 2 trillion, even though I think it's still going to go up. but I can't buy it because it's never good. It's never a good time to buy Nvidia. The market has dragged the price up so high, I can't buy it. That's generally what happens. The more people that know about a stock, the less appealing it is because it's already priced in. The stock is too high. I can't get a good deal on Nvidia, so I just can't buy it. But if there's another pullback, I kind of wish I bought it at the pullback. Because it was good. There was this pullback in 2021. It was like 700 billion market cap, and then it came down the following year to, I think, 150 billion, maybe 200 billion. That was a good pullback. And I should have bought. I mean, of course I should have bought, but that was the only good time. And even then, it was just it was trading at the right level, at least what I thought at the time, based on their cash flows, because they actually struggled in 2022. Their free cash flow went from 8 billion to 4 billion. This is recently, right? 8 billion, 4 billion. And their revenue, well, it didn't go down, but it went from 26.9 billion. It was almost exactly the same from 2022 to 2023. That's not a good sign. Usually when a company's flat on revenue or down on free cash flow, there's a huge sell-off, because you expect a company like this to be growing like 20, 30% a year. But yeah, obviously it's not a casino. I'm not trying to take the biggest risks for the biggest rewards. I'm trying to grow at a pace, hopefully better than the market, but grow my portfolio 20% a year. And you can't do it by investing in stuff like this, because obviously it would have worked out. But if I put money into Tesla, when Nvidia is trading at 700, 800 billion, where it should be, then I'll sound like I know what I'm talking about. Right now, I sound like an idiot for saying, "Oh, I shouldn't invest in them." But that happened with Tesla too. People were saying, "Oh, it's such a good investment," blah blah. But it was cut in half. People got burned if you invested up here, but it's been cut in half, and it might come down even more. I think it belongs at 300 billion market cap. It's come down to 500 billion. It was like 1.2 trillion, right, at the peak, and now it's about 600 billion. So it's down about 50% from the peak. So now I feel good, because I was so pissed I didn't buy it. Now I feel good. My thought process was correct. And that's going to happen with Nvidia too. I thought so about MasterCard when I first started investing. One of the best tech stocks I've seen in a growing industry with a great valuation and balance sheet. But Tesla's down $400 over 3 years. The online sports betting industry is growing. Yeah, it's too hard to. You want to kind of buy stocks before everybody knows about it, or you want to buy stocks when people stop buying it, they forget about it. Like Apple, there was a good opportunity to buy Apple when it was coming down this year, and now it's coming back up again. So if you had the foresight, Apple came down to 170. So you could have made 30-40% on Apple in a few months when people were forgetting about it and saying, "Oh, it's done." What other stocks were people saying? Oh, Intel. I don't know. I don't think Intel is a good investment. 31, 132. Let's see. Did anybody read The Big Short? I think if you read it, it's better than the movie. But I remember the guy, The Big Short. He he invested for his clients, and he was shorting the subprime market, right? And so his assets under management. I mean, I don't know the exact numbers, but like it was something like this, like. So he's investing money for his clients. Obviously, his clients want to make money, and I like Pfizer. So say he has like 20 billion in investing for all his clients. Michael Berry. No, it's not Michael Berry. Michael Berry does his own thing, right? And then he was shorting the subprime market. Obviously, he was doing other things, and then his clients were getting pissed off at him, like, stop, shorting the market. I want to make money. It's not working, And like 2006, his assets under management were 18 billion. So like his clients are down like almost 20%, and the market's going up, and everybody's yelling at him like he doesn't know what he's doing. And in 2007, he's down again, and then people are pissed off at him. They're taking their money out, and he's trying to like tell them, listen, I know my strategy makes sense. It's going to be a crash, a subprime or crash. And then it finally pays off. And then it starts happening. Like he made a little money in 2008. So now he's up to 25 billion from 20 billion. And then he blows up. He's up to like 110 billion. So for years, you have people yelling at you and cursing at you. You're an idiot. You don't know what you're doing. Because you're only as good as your last trade. And if you would have stuck in there, you would have seen that if you kept your money with this guy, you would have made a ton of money because he knew what he was talking about. It's like the same thing with like how Tesla was. A lot of smart people were saying it's overvalued. And they were saying, "Oh, you're stupid. It's not overvalued." But now you don't find out the truth until like sometimes it takes a few years. What, like Buffett said, what was that? You never know who's swimming naked until the tide comes out. Only when the tide goes out do you discover who's been swimming naked. So yeah, so it takes a long time sometimes for you to be right or wrong. But you might be following like you're watching certain YouTubers and you follow them and you might make money, but then in the long run you'll find out if they really know what they're talking about. Like me too. Well, I sold my Intel. I sold it at a loss. And it's just the future is still negative. So they had negative free cash flow since 2022, and the forecast is negative going out. I wish we could get like let's get the past performance because so 10 billion. So they peaked at 21 billion was their peak. Let's see if I'm not going to say they got 21 billion. Let's just say they hit 10 billion, half of their peak. Then they're still okay, they need to get to 15 billion just to be where they're at. If they get back up to 21 billion, then they're undervalued. But I don't know if they're gonna. Yeah, it's I think it's possible. I just think if they didn't do if they just were fabless, if they just focused on like Nvidia, they just fabless, and they X the foundry business. The thing is, they're doing manufacturing in the U.S., which is so expensive, and I think it's just better to outsource it to like Taiwan Semiconductor. I just think it's too expensive. But who knows? I mean, have they always manufactured, even in like the 90s and 2000s, early 2000s? Intel always foundry. It's a long road. I don't know. I lost faith in Netflix is at its all-time high. I bought a lot of Netflix when it was down to like 180, and I wish I bought even more when it fell to like. But there's so much value in having like 300 million customers. There's so much you can do with that. There's so much opportunity to like to upsell or sell other products. That's why I like Meta so much. There's just so many people on a platform that they can like marketing, and there's just so much you can do. 6.5, 8.5, 10.5. Okay, even if I get, even on conservative model, I'm at 552 a share is 686. But that's like, I would have never guessed Nvidia would 20x when I looked at their numbers in 2022. I didn't know they were going to grow 6x their free cash flow. So these models don't work for those situations. They're only meant for like companies that have somewhat stable or somewhat predictable numbers. So I'm looking for like predictable numbers where the stock has kind of gotten beaten down a little bit, or Meta's sitting on 15 billion cash. That's it? 15 billion? No, it has to be more than 15 billion. I was thinking it's close to 100 billion now. Okay, 58 billion. 58 billion of cash. They were 65 billion at the end of 2023. Yeah, I'll be right back. So there's going to be a huge shift to inference for AI in the next few years. 80% increase from 25. If Intel only meets one of the goals, they will regain data center leadership. I don't know. Yeah, bathroom break. Data center. I don't know. I mean, it's possible. It's just hard to. Their technology doesn't seem as like advanced and robust as AMD and NVIDIA. But I mean, I didn't see NVIDIA's. I didn't know NVIDIA's chips were so great. I thought semiconductor chips were like kind of like a commodity. Like when Intel was part of Intel was like, front and center of the PC boom. They made the semiconductor chips that went into like those IBM machines, and Microsoft made the software. And then everybody needed a computer in their house, and then there was computers everywhere, and then that's why Intel went up so much in the late 90s, early 2000s, and Microsoft. But it's cyclical, right? Semiconductors are cyclical. And the reason why didn't IBM keep going up? Like why did Microsoft keep going up? And not IBM. Well, there's no guarantees. It's kind of like, why wasn't Yahoo the biggest search engine? Why is it Google? Sometimes companies replace other companies. You have to kind of evolve, and you have to pivot. Microsoft did those things. So in the past 5 years, Intel is down 7%. Microsoft is up 37%. IBM is up 31%. No, that's not. Is it the past 5 years? Well, that can't. Okay. So this makes more sense. So in the past 5 years, Intel is down 35%. IBM is down 30%. Microsoft is up 225%. I wish we could go back to 2000. So yeah, if you go back to 1998, so these three companies, I think, were the main catalyst for that PC boom. Microsoft, so they're up 700% since 1998. It's not that much. Nvidia's up 700% in the past year. And this is 26 years ago. Microsoft is up 700. Oh no, but it only goes to 2019. Okay. I wish these charts went back further. Okay, so since 2003, so that was right in the beginning. I mean, that was a few years after the start of it, but since 2003, Microsoft is up 1,500%, IBM 125%, Intel 63%. So in 21 years, Intel is only up 63%. So why didn't they evolve as much as Microsoft? Well, it's kind of like a commodity. Semiconductor chips are generally not specialized. Nvidia is doing a good job at kind of breaking out, but eventually it's going to come back. It's going to flatten a little bit, and then companies like AMD will take market share, Qualcomm, and a few others. But Microsoft does something a little more specialized, right? With Excel, and of course they started making computers, things like that. And just IBM just never kept up with the trends. They don't sell SAS chips are hard. AMD getting done by ARM. Read not too long about Meta beginning to work on its own chips in-house. Scott, did you? Yeah, I think I've heard that. That's the thing. Anytime there's money to be made with something, people will go after that. They're looking for market share. Like I remember when there was cable in like the early 90s when I got it. And then so we finally had access to like more than like 70 television channels. Because in the 80s it was like you could only watch like channel 2, channel 4, channel 5. There's only like maybe 10 channels. And then cable came out. It gave people more things to watch. And then video stores came out. And I remember my father opened up a video store because that was a new the new thing, the new trend. But then Blockbuster kind of took over. They kind of bought up. The way Blockbuster started was they went to they opened up. It was a franchise, Blockbuster, so they opened up all these video stores all over the country. And then if you owned a video store, like say in your town, there was this video store, Jim's Video Shop, and that's where most of the people in the town bought videos from. So Blockbuster just said to the video store owners, they said, we want you to be a Blockbuster. So we want you to convert your store to a Blockbuster, and then you could become a franchisee. And if you don't agree to that, then we're just going to open a Blockbuster and take all your business. So they were able to, Blockbuster converted all these video store owners to Blockbuster franchisees. So it's kind of like when there's money to be made, people will try to get that money. And yeah, I'm sure there's a lot of people looking to develop their own chips, because you don't want to have to rely on somebody. You don't have to want to rely, like if you're spending 10% of your money on like buying a certain product, you want to find a way to either you make the product yourself, or you buy it for cheaper, or you just buy the company that's selling you the product. Intel is in the foundry business, whereas NVIDIA is fabless. Right now, Intel is spending. Well, Intel does both. They're fabless and foundry. They're one of the few like hybrids. Most companies just do one. That's why I think it's a little tricky, because it's expensive to make things in the U.S. You outsource to other countries because just labor is just so expensive, and then it's not just labor, which is the main one, but there's always a lot of like fees, like taxes. It's really, really expensive. It almost doesn't make sense to make certain products in the U.S. So you have to kind of like outsource. You buy from other countries and then you ship it to the U.S. No matter how much the U.S. tries to make it advantageous for people to manufacture here, it's never going to get to the point where it makes sense financially. How much cash are you all holding, actually? I don't hold much cash. Whatever my next paycheck is, that's my cash. Intel makes things all over due to geopolitical risk. But yeah, you'll see, like, once there's an opportunity to make money, people will go after it and then start taking market share. And it's really hard to like always be the top dog. Unless you have such an amazing brand name like McDonald's or Coca-Cola, it's hard to stop people from taking some of your business. Zoom out. Me zoom out? What about YouTube? Meta, yeah, 58 billion in cash. Yeah, so what other stocks? So Etsy, that was a bad. But we'll find out. It's always like every investment at some point is really good or really bad. Usually, if you're up, it's a really good investment. and you could be up for years, and then the stock tanks, and it's a really terrible investment. So for years, it was a great pick by you, and then for maybe the last month, it was a terrible pick. The foundry issue is reminiscent of the U.S. strategic requirement for massive forges. The U.S. does not want to rely on Taiwan and the like for semiconductors. Yeah, so how is NVIDIA going to stop people from taking their market share? Yeah, I don't know. I don't know if they can. I guess people got to start putting money into like AMD. That's what AMD is only 260 billion. It's not even up that much. So I guess it was 30 like 5 years ago. So now I guess it's up 5x. But it seems like nothing is, no matter how good you do on investment, it's never even close to like NVIDIA. We're seeing other mega cap companies attempting to ride the AI wave for their investors by buying NVIDIA chips presently. Yeah, but like as you said, people will of course buy NVIDIA chips if it makes sense for the company. But a lot of companies are trying to make their own, and that's not an easy task. But when you have companies like Meta, Apple, Microsoft, they're all tech companies, so they're not like new to this stuff, and they have more than enough money to figure it out and to buy the people to figure it out. So no one wants to rely on a company. So that's why when a company gets too big, that's why the U.S. usually steps in. And with Microsoft and Apple, the U.S. stepped in and didn't want them to grow too much and become too powerful. So yeah, so what's the next? But it was just like there was a dot-com boom, the EV boom. And if you notice these booms after like a few years, there's usually only one or two or a handful of companies that did well. Almost every other company is gone or just doesn't have a meaningful value at this point. So NVIDIA will probably be around. Will still be on top. Who knows? But it's kind of like crypto. There was the crypto boom, and it's still kind of there, but it's not as big as it was. But after everything fizzles out, most of these other crypto coins are going to be worth nothing. Some of them are close to nothing already. What's the other popular crypto coins? There's Dogecoin is not a good coin, right? Well, Dogecoin started so low. So let's see. Yeah, HD, right? That's doing well. Yeah, Nvidia, 39 billion of free cash flow. Broadcom has more free cash flow than Taiwan Semiconductor. 700 billion. Wow. They've come up a lot, right? Broadcom. That's probably up a lot. That's probably up like 1,000%. So it was 200 at the low, and it's getting close to, it's like 17, 1800. So it's up 7 or 8x. Is anybody investing in Broadcom? I thought AMD had like similar chips to Nvidia. Is it Broadcom is their closest competitor? Qualcomm. Intel is investing so much into capex, negative 12 billion. I mean, it's got to pay off, right? That's just, it's too much. Nvidia just happens to be ahead at the moment with the latest LMs. Meta and the like have to present themselves as pursuing AI, so Nvidia, who's offering the current solutions, benefits. Yeah, I guess but the AI boom, I think there will be a lot of benefits with AI, but I just don't think it's going to be as great as people think. I really don't. I don't think it's a life changer. Like life changing things were like cars that changed lives when cars came out. I think internet was life changing. Like it totally skewed. It took a little bit for people to come on board. In the beginning, people obviously didn't know how to use it, and then a lot of people didn't know how to make money from it. Even though it was cool to like find anything you want at any time, like how did companies make money? Then eventually things popped up like eBay, Amazon, and that kind of made it a lot easier for the masses. Now it's kind of easy to have your own store online and sell things. But I just don't see it like how it's going to be like extremely like, I think it's going to be helpful. And I do think there's going to be a lot of negatives with it. Like cars obviously is life changing, but you know, a lot of people have died in cars. I mean, so, but I think the fact being able to drive a car is trumps dying in a car, even though it happens a lot. People die in cars. Being able to drive is far superior than the risk of that. You just have to obviously be a smart driver, things like that. Yeah, it killed horse and buggy investments. Horse and buggies were where it's at 150 years ago or 125 years ago. And now it killed those stocks. It's just like the internet because I know like DVD players killed VCRs. Like VCRs, after DVDs came out, nobody cared about VCRs. But then the internet or like online streaming, it kind of, who cares about DVD players, or who cares about like, well, the movies are still around, and I think they'll always be around, but like Netflix really hurt movie theaters. It took a lot of business away, because I'd rather just sit at home. And now I think you could even if a movie's in the theaters, you could even get it on YouTube or something for like $20. So I think there was like that. What I'm saying is, in order for the like the .com boom to be successful, people and businesses need to make money from it. And we did find a way. It wasn't right away. It wasn't like after a few years of the internet, tons of people were making money off the internet. It took a long time. It took about 10, 15 years, and it's still kind of growing, that part of it. But for AI, I don't see how it's going to really help businesses and people transform their lives as much as the internet did. I mean, what is so AI? How does it help businesses? It's supposed to help like lots of small business, like if you have a collections business, and I remember I called this company, and I needed to like, I applied for like some tax credit, and it was an AI robot helping me the entire time. And I knew it was AI, but it worked. They did give me the answers I need. What they will get is, it's not going to find a cure for cancer. Right. It's like computers are only as good as the people building the computers. So yeah, a computer won't cure cancer, but a computer will definitely benefit a doctor or scientist a lot, helping them cure cancer. YouTube's, but it's going to take a good 10 to 20 years for AI to really see the benefits. And people don't have the patience to wait so long. They want to see results. And right now, there are results with just that one company, NVIDIA, because all these big companies are investing with NVIDIA and buying semiconductor chips from NVIDIA. But we need, in order to get results, we need those companies, Meta or whoever is buying these AI chips, to make money with it, or to help people make money. But I guess it was like that with Amazon, right? Amazon was an early, and Microsoft and Apple, they made a lot of money off technology, or off .coms, like people using the internet. So if you put your money to those companies in the beginning, but yeah, how would you know that, right? Okay. Any other stocks we should look at? Any ideas for what to invest in tomorrow? So NVIDIA, Taiwan's a good investment, right? Ryokan. AI is going to increase productivity in many industries like healthcare. That I hear that a lot. It's going to increase productivity. And I'm not doubting it at all. It would be good to kind of see it in action. The only thing with AI that I really saw that was beneficial to me was ChatGPT. So it helps me like find, it's just instead of like using Google to search, ChatGPT, you can ask a question and it could give you an answer. Some models are already more accurate than radiologists looking at MRIs and declaring. How will high quality LLM based AI help? How are unbiased, never tired, hungry, etc. self-improving fake humans better than humans? Yeah, that's what I just don't. LLM based. Yeah, that's what I question. I don't know. I don't really know. What's the thing? I'm trying to think of what was like a fad that people thought was gonna change the world, but it never amounted to really anything. Biggest fads, like I never. But this happened with Meta. Like just because companies are putting money into it, like Meta was putting money to the metaverse, but no one else was like, it didn't seem like anybody was really buying into it, so they ended up just scrapping it. But now people are doing AI, so they were kind of doing AI before anybody else. But until like ChatGPT and NVIDIA, like it wasn't really. Sounds kind of scary at first, but these fake humans will continue to run. Circles around humans are prioritized their personal fun, agenda, passion for the work. But EVs were, I don't want to say EVs were a fad, but there was so much more hype, and it's still not at the point where it's clear electric vehicles are going to take over. I think, are we still moving towards the US of everybody having an EV by a certain year? I guess these are more fads for like creepy clowns, Neopets, Heelys, Pokemon Go. Oh, Pokemon Go was a fad. Remember Nintendo stock? How it shot up because of Pokemon Go? T-bowing. Flanking and YOLO. Ask Jeeves. They don't really talk about these fads. They just 3D TVs. There was a plane. Planes. So it could get you from like New York to LA in like 2 hours instead of 5 hours. But it never really got off the ground, so to speak. The planes were available. I guess with things like AI, you need like you need like the government on board, because if anything takes away from like tax dollars, then big companies will fight for that, not to, fight against it. Concorde, was that the plane? What do you think about PayPal? Concorde. Is this the what I was thinking about? Yeah. Okay. I mean, 800 miles an hour. Yeah. Sometimes you have a better cure for something, but if what you develop like affects a big industry, where that industry will lose a lot of money, then there's going to be a lot of pushback. I think I like PayPal. I think it's a good investment. I'm not as it's just, I think they have a good market share, and I think they have a good it's a tough industry. I just feel it's too competitive. There's too many like really, really big companies, like credit card companies, who can kind of do what you're doing, or and I think that's why the stock is really struggling. Like, it was 35, so it's not at its all-time low, but it's like at a like a 10-year low. So I'm a little concerned, but I think like it's really scalable. It's a good business because you can make a lot of profit with little expenses, and you can easily grow into other countries. But it's just a competition thing. But yeah, is it a good time to buy Nvidia? Like, maybe we should just all buy Nvidia and not even worry about anything else. There's 300. Now it's 67. Okay, well, I guess we'll wrap it up here. So thanks for commenting. We had a good number of people, over 20 people at one point. So let's just keep our in the market and see. Maybe there's some Good opportunities out there. I keep looking for them, right? Okay, I'll talk to you later.